Hi friends, welcome to Posh Pro HR, your trusted source for everything related to workplace policies, employee rights, and HR best practices. In today's video, we will cover two critical topics. Every HR professional must know the Payment of Bonus Act 1965, Central Act number 21 of 1965, along with Payment of Bonus Rules 1975 and notifications commentary on Payment of Bonus Act. And now, I will explain about the Payment of Bonus Act 1965, the objective. Until the Payment of Bonus Act was promulgated, bonus was linked to profits, meaning that if an establishment did not make profits in a certain year, the employer was not liable to pay bonus. The present act, however, makes the employer liable to pay bonus to an employee as an annual statutory payment irrespective of the extension of profits. And now, applicability of the Act. Who are entitled to bonus? Section 2, 13 and 8. The Act includes all employees, factory workers or clerical staff or executives drawing wages or salary up to 10,000 rupees per month, who perform any skilled, unskilled, manual, supervisory, managerial, administrative, technical or clerical work. To become eligible for bonus, every employee must have worked in the establishment for not less than 30 working days in the relevant accounting year. These rated employment like loading and unloading on contract basis on a non-exclusive basis has not been visualized under the Payment of Bonus Act. When loaders and unloaders were free to do work elsewhere, they will not be entitled to bonus. Bonus is not payable on subsistence allowance paid to an employee during the period of his suspension, since such employee did not actually perform any work. Compensation rankings as wages. Retention allowances paid to seasonal employees will form part of wages. Under the Act, such employees will be therefore entitled to bonus. Bonus can be forfeited if dismissal is for dubious behavior. Ex gratia not being bonus under the Payment of Bonus Act cannot be claimed by the workman as a matter of right, since it is paid at the will of the employer. City compensatory allowances will form part of wages for calculation of bonus. How much bonus payable? Sections 10 to 13. A minimum of 8.33% of wages actually earned during the accounting year, subject to a minimum of 100 rupees, is payable to each eligible employee irrespective of profit or loss. The maximum amount payable is limited to 20% of the wages. Wages are understood to be basic pay and dearness allowances and would exclude any other allowance. When the salary or wage of an employee exceeds 3,500 rupees per mensa, the bonus payable to such employee shall be calculated as if his salary or wage were only 3,500 rupees per mensa. Where an employee has not worked for all the working days in an accounting year, the maximum bonus of 100 rupees or as the case may be of 60 rupees if such bonus is higher than 8.33% of his salary or wage for the days he has worked in that accounting year shall be proportionately reduced. When is bonus payable? Section 19. The bonus is payable within a period of 8 months from the close of the accounting year. Where there is a dispute regarding payment of the bonus, it becomes payable within a month from the date that the award becomes enforceable or the settlement comes into operation. Methods of computation. First step, net profit. Presumption of accuracy, section 23. Accuracy of the balance sheet and profit and loss statement of the establishment is presumed under the Act if they are duly audited by qualified auditors. If, however, the arbitrator or tribunal hearing a dispute is not satisfied with the accuracy, or if any trade union or employees being parties to the dispute demand clarification of accuracy, the employer shall compel with the demand. If the authority requires auditing of accounts of an employer, not being a company such as that of a proprietary concern or a partnership firm, such employer shall compel with the requirement within such time as directed at his own expenses. Second step, gross profits. Section 4b and second schedule. Gross profits for the purpose of bonus formula would be a national gross profit which is different from the one that is shown as gross profit in the profit and loss account. Calculation of gross profit shall be as under the Payment of Bonus Act 1965. To which establishments does the Act apply? Section 16. Where an establishment is newly set up, whether before or after the commencement of this Act, the employees of such establishment shall be entitled to be paid bonus under his Act in accordance with the provisions of subsections 1A, 1B and 1C. 1A means in the first 5 accounting years following the accounting year in which the employer sells the goods produced or manufactured by him or rendered services. As the case may be, from such establishment bonus shall be payable only in respect of the accounting year in which the employer derives profit from such establishment, and such bonus shall be calculated in accordance with the provisions of this Act in relation to this year, but without applying the provisions of Section 15. And now, what is 1B? For the 6th and 7th accounting years following the accounting year in which the employer sells the goods produced or manufactured by him or rendered services, as the case may be, from such establishment, the provisions of Section 15 shall apply subject to the following modifications, namely: in Section 1, for the 6th accounting year, set off as the case may be shall be made in the manner illustrated in the 4th schedule, taking into account the excise or deficiency, if any, as the case may be, of the allocable surplus set on or set off in respect of the 5th and 6th accounting year. And point number 2, for the 7th accounting year, set on or set off as the case may be shall be made in the manner illustrated in the 4th schedule, taking into account The access oral or written provides for payment of remuneration to any partner, and if the total remuneration so payable is less than the said 25%, the amount payable subject to a maximum of 48,000 rupees to each such partner, or if the total remuneration so payable is higher than the said 25%, such percentage or a sum calculated at the rate of 48,000 rupees to each partner, whichever is less, shall be deducted. If the employer is a proprietary concern or Hindu undivided family section 6D and 3rd schedule, 25% of gross profits after depreciation or rupees 48,000, whichever is less. And now, fourth step, allocable surplus. What is allocable surplus? Section 2(4). Allocable surplus is defined as 67% of the available surplus in relation to a company other than a banking company, in such company has not arranged for declaring dividends within India according to Section 94 of the Income Tax Act, when the undertaking is a partnership firm or a proprietary concern. Allocable surplus would be 60% of available surplus. While arriving at the allocable surplus for calculating bonus for bank employees, it will be proper for the bank to deduct 40% of its net profit to create reserve fund as permitted by Reserve Bank of India. Distribution of allocable surplus sections 10 and 11. Where an employer has any allocable surplus in any accounting year or not, he is bound to pay to every employee a minimum bonus of 8.33% of the salary or wage or rupees 100, whichever is higher if the employee has not completed 15 years of age at the beginning of that accounting year. He shall be paid 8.33% of salary or wage or rupees 60, whichever is higher. When the allocable surplus exceeds this amount of minimum bonus, an amount in proportion to the salary or wage is payable, subject however to a maximum of 20% of such salary or wage. Set on and set off of allocable surplus, Section 15 and Schedule 4. Where for any accounting year the allocable surplus exceeds the amount of maximum bonus payable to the employees, the excess shall subject to a limit of 20% of the total salary or wage of the employee be carried forward for being set on it the succeeding accounting year, and so on, to be utilized for the surplus of payment of bonus. Where for any accounting year there is no allocable surplus, or the allocable surplus in respect of that year falls short of the amount of minimum bonus payable to the employees, and there is not sufficient amount carried forward and set on which could be utilized for the purpose of payment of minimum bonus, so much amount as is necessary for the payment of bonus under this act shall be carried forward for being set off in the succeeding accounting year, and so on. The method of setting on and setting off allocable surplus is illustrated by the fourth schedule. In this schedule, the total amount of bonus equal to 8.33% of the annual salary or wage payable to all the employees is assumed to be rupees 1,04,167 rupees. Accordingly, the minimum bonus to which all the employees are entitled to be paid 20% of the annual salary or wage of all the employees, would be rupees 2,50,000. And now, bonus payable pro rata, section 13. Where an employee has not worked for all the working days in an accounting year, the bonus payable to him shall be proportionately reduced, subject however to the minimum rate of 8.33% being protected. For this purpose, an employee is not deemed to be absent from work if he has been laid off, if he has been on leave with salary or wage, if he has been absent due to temporary disablement caused by accident arising out of and in the course of employment. Deductions from bonus sections 17 and 18. Where any accounting year an employer has paid any customary bonus, such as puja bonus or an advance bonus, the employer shall be entitled to deduct such amount from the final amount of bonus payable by him. Where in any accounting year an employee is found guilty of misconduct causing financial loss to the employer may lawfully deduct such amounts from the bonus payable in respect of the accounting year only. Time limit of payment of bonus, section 19. All amounts payable to an employee by way of bonus under this act shall be paid in cash by his employer. Where there is a dispute regarding payment of bonus pending before any authority under section 22 within a month from the date on which the award becomes enforceable or the settlement comes into operation in respect of such dispute. In any other case, within a period of 8 months from the close of the accounting year, provided that the appropriate government or such authority as the appropriate government may specify in this behalf of may upon an application made to it by the employer, and for sufficient reasons by order extend the said period of 8 months to such further periods or periods as it thinks fit. So however, that the total period so extended shall not in any case exceeds 2 years. Applicability to public sectors establishment, section 20. If any accounting year an establishment in public sectors sells any goods produced or manufactured by it or renders any services in competition with an establishment in private sector, and the income from such sale or services are both in not less than 20% of the gross income of the establishment in public sector for that year, then the provisions of this act shall apply in relation to such establishment in public sector as they apply in relation to a like establishment in private sector. Recovery of bonds due from an employer, section 21. Where any money is due to an employee by way of bonus from his employer under a settlement or an award or agreement, the employee himself or any other person authorized by him in writing in this behalf or in the case of the death of the employee is assignee or herein may, without prejudice to any other mode of recovery, make an application to the appropriate government for the recovery of the money due to him. And if the appropriate government or such authority as the appropriate government may specify in this behalf of is satisfied that any money is so due, it shall issue a certificate for that amount to the collector who has proceed to recover the same in the same manner as an area of land revenue, provided that every such application shall be made within 1 year from the date on which the money becomes due to the employee from the employer. Provided further that any such application may be entertained. After the expiry of the said period of 1 year, if the appropriate government is satisfied that the applicant had sufficient cause for not making the application within the said period. In this section and in sections 22, 23, 24 and 25, employee includes a person who is entitled to the payment of bonus under this act but who is no longer in employment. Reference of disputes under this act, section 22. Where any dispute arises between an employer and his employees with respect to the bonus payable under this act or with respect to the application of this act to an establishment in public sector, then such dispute shall be deemed to be an industrial dispute within the meaning of the Industrial Disputes Act 1947 or of any corresponding law relating to investigation and settlement of industrial disputes in force in a state and the provisions of that act or as the case may be, such law shall save as otherwise expressly provided apply accordingly. Audit of accounts of partnership and proprietary firms, section 25. Where any dispute regarding the validity of the balance sheet and profit and loss account prepared by the employer in the case of a partnership firm or a proprietary concern is disputed by the employees. Such disputes shall be referred to the competent authority under the Industrial Disputes Act 1947, who may order the audit of accounts by such auditor as it thinks fit, registers and return. Every employer shall maintain 3 registers, A, B and C, to record available surplus, allocable surplus and amount disbursed. Respectively, the registers are subject to inspection by the controlling authority. The employer shall send annual return on Form D to the controlling authority within 30 days from the date of dispersal of bonus. Now, penalty. The Act provides for punishment to a defaulting employer by way of fine or imprisonment or with both. Offences by companies, section 29. If the person committed an offence under this Act is a company, every person who at the time of the offence was committed was in charge of and was responsible to the company for the conduct of business of the company as well as the company shall be deemed to be guilty of the offence and punished accordingly. Contracting out. Nothing contained in this Act shall preclude employees and employers from entering into agreement for payment of bonus under a different formula provided. It has the prior approval of the appropriate government. The minimum bonus rate as stated in the Act is preserved. Such employees are not entitled to be paid bonus in excess of the minimum if the employer has no allocable surplus in an accounting year, or such employees shall not receive bonus in excess of 20% of salary or wage earned by them during the accounting year. And now, about the Payment of Bonus Act 1965 summary. I am explaining about the Payment of Bonus Act 1965 summary. Bonus is payable to employees in an establishment where 10 or more persons are employed. Employer should pay a minimum bonus of 8.33% of wages actually earned during the year, subject to a minimum of ₹100. Irrespective of profit or loss, the Act includes all employees drawing wage or salary up to ₹3,500 per month. an infancy period of 5 years is allowed. Bonus shall however be paid even during the infancy period if adequate profits are made by the establishment. Bonus is payable within 8 months from the close of the accounting year. Available surplus is calculated according to the second schedule of the Act. Allocable surplus is 67% or 60% of available surplus according as to whether the establishment is a company or a firm. The maximum bonus payable is 20% of wages. Allocable surplus is permitted to be set on or set off. The employer shall maintain register A, B and C and submit annual returns in Form D. The Act permits contracting out subject to the approval of the government. Thank you, friends.